friends, this is the Cryptonian. Welcome back to my channel. I appreciate your time. In this video, we're taking a look at Bitcoin, but we're taking a look at the weekly chart. Now, what you can see here is what I have applied from the prior cycles, and I've applied it to this cycle, and it pretty much maps out the structure of what we've seen in the past, and I've applied it here. We see that this white line is the last phase, the breakdown below that white line. This finishes in a bottom, and then after we move up, we come off of the bottom, and then once we break above this white line, this starts the bull run. And we can see that Bitcoin did break above it about 4 weeks ago. We're in our third week above that. And what I'd like to highlight here is typical behavior of what we've seen in the prior two cycles. Now, the prior two cycles were a bit different. One was very bullish. The other one, we had the global crisis. I won't name that crisis, but I'm sure you pretty much know what I'm talking about. And so both of those cycles differ in that way. However, there are some similarities, and the similarities are just what I'm showing you here. We have a breakdown below this white line, and then we have a break above the white line, and between that is the bottom. And then once we break above that white line, normally what happens is we go right up into the Fibonacci 0.5 to 0.618 level. And you can see I identified that level with a red box here, okay, this red box. So typically what happens is we go up into that red box, and then we get rejected, and we then experience anywhere from a 30% to a 60% correction. So that being said, that red box is only about 15% away. Well, actually about 11 or 12% away, and if we hit the 0.6 Fibonacci, then that is 30% away. So that being said, we're not very far away from this rejection zone that we've seen Bitcoin hit in prior two cycles. Of course, the price action was not exactly the same in the prior two cycles, but the price action nonetheless did reflect the basic idea that we went up into this Fibonacci retracement zone. It's a Fibonacci golden pocket for the bears, and then we were rejected and had in 1 year a 30% rejection to the downside. After that, sell off, and then after that we had a prior year we had a 30% correction. So I don't think that we're going to get a 60% correction. I think that was pretty much a black swan event. But I do think that a 30% correction, 20 to 30, maybe 25% correction is probably very doable, very likely, right? So that being said, you can see that the trajectory here, we're starting to follow this pretty accurately. And that being said, the price level for the 0.5 Fibonacci is 41,557. 41,557, that starts that resistance zone where typically in prior markets, prior cycles, we saw a rejection there, right? And then the top of that red box is around 47,644, and that is a 0.618 Fibonacci. So anywhere in this box we could probably see the rejection. Now this cycle is a little bit different, and that is because we have the ETF, and that ETF, the window for approval is this week. Now that does not guarantee that the SEC will approve it. Actually, there's more of a chance that they will not approve it then the chance that they will approve it, right? And and I've posted this information on my Twitter. The link is in the description below in this video, and you can see that I've shared this chart with you. And James Seifert is a guy with Bloomberg. He's a financial analyst, and he's following this information. So um, that is some important information. And again, if for example we do get an ETF approval today or tomorrow, then the market is going to go crazy, right? And so most likely we're going to go straight up and we're going to hit this red box area of resistance. Now, we could even go above it if we have the ETF approval. Okay, we could even pump. I would not say that we would pump, you know, all in the same week, all in the same day. It would take, several weeks for Bitcoin to pump, but nonetheless, I think Bitcoin would probably pump right up into this area. So that being said, after that, I've calculated a 30% drop from the top of the red box. That brings us down to about 34,157. So I would say about 34,000. And on my yellow line, the path that I think Bitcoin could probably take, I actually came down a little bit lower. I came down to about 31,000, and the reason is because Bitcoin likes to grab liquidity. Bitcoin likes to break support. That way, the large players, the whales, they are able to buy from the fear of retail. Retail, the smaller players in the market, they get afraid. They think, okay, now support is broken, then Bitcoin's going to continue lower. So they sell, and they sell right into the hands of the whales. And so that may or may not happen. There's probably so much interest right now that probably will not happen. So I'm probably thinking, 33, 34,000, but it really depends on how high we go in this red box where we get rejected or have a correction. So that being said, I want you to understand that the market probably can continue to the end of the year. 2024 is right about here, okay? And then we're going to have some kind of a sell-off probably close to the end of the year. The reason is because of taxes. People like to sell, take profits because they need to report those profits on taxes. And of course, during the holidays, they like to have extra money to retail likes to have extra money to purchase gifts for their family and loved ones. However, retail, there's not a lot of retail in the market right now. So this is going to be a very interesting cycle. This is going to be a very interesting next few months, this Q4. We may not see a very big drop. We may not see a very big drop. We may see a small correction, maybe a drop. Like I said, 34, maybe even 35, and then sideways price action, and then moving into 2024. Actually, that would be somewhere around in here. We would go higher, or maybe later on in the year we would go higher. So the latter part of this yellow line probably is not as accurate, but I just want to give a general idea. So here's my point. My point is that after we hit this $41,000 to $47,000 area, and then we have a correction, that correction is probably going to be, or may be, the only opportunity that you have to buy Bitcoin or even buy altcoins as they have a drop in price before the next bull run gets started, and then the prices are just up, up, and up after that. That's called the markup phase. That is when the large players just keep pushing it and pushing it higher and higher and higher, and of course to generate profits for themselves, right? So we need to be aware of that. So right now on the weekly, we have support here at 32,000 and we have resistance starting at 41. And so Bitcoin is going to have a lot of volatility in between these price points. And of course, if the ETF is approved, most likely Bitcoin will push very strong, very hard to the upside, probably straight into this red box of resistance, between 41 and 45 or 47,000. And then most likely we'll have a correction. And I'm going to be buying those dips, especially with the altcoins and those projects that I'm interested in. Okay. So I just wanted to put that out there. And please keep this in mind. Again, this is not financial advice. I'm just sharing with you what I've learned from analyzing prior cycles and my experience in the market and in crypto and the cycles. So thank you for watching, friends. Again, please click like, subscribe, and let's go on this journey together. Take care. We'll see you next time.